Hi, Martin Turner here. This week we look at restating our firm's statement of changes in equity, how to link cells in Excel, and the difference between the operating and financial activities of our firms.
Hi, Martin Turner here, and welcome to Act 11059, Accounting, Learning and Online Communication, our Week 5 lecture, Analysing Financial Statements. So we're starting this topic where we start to explore, get to know our financial statements a little bit better. Today we're going to be looking at some common questions that you might have concerning restating our financial statements. And we'll be looking at the what, the why and the how, and a few tips. And we'll also be looking at a short video, and then we'll be having a minute paper. Now, some people are already starting their assignment 2. That's the smart money. So once you finish assignment 1, you just go straight into assignment 2. And some of the issues, and the key task in steps 3 and 4 of assignment 2 is restating our financial statements. And here are some common questions that you might have as you do that. A number of people have noticed as they put their firm's financial statements into their spreadsheet that some firms have restated figures in their annual report, in their financial statements. And so some people are asking, is this different to our restating of our firm's financial statements? And the answer is yes, it is. It's a different concept. When you see in your firm's financial statements, there are 2 years of figures. And if your firm changes its accounting policies or if accounting standards change in some significant way for the firm, they will restate the previous year's figures to be on the same basis as their current year. So that's one use of the word restated. That's got nothing to do with what we'll be doing. We're going to be restating our firm's financial statements to separate the operating and financial activities of our firm. So it's a different, same word, something completely different. This happens quite a bit in accounting. Do I use parent or consolidated group figures? Some people have their company or parent company accounts in their annual report as well as the consolidated or group accounts. Sometimes they're in the footnote. Sometimes they're more prominent, and quite often they're not there at all. But for those who do have the parent or company accounts, we don't use those. We use the consolidated accounts, like with Ryman Healthcare, the consolidated income statement, or the consolidated balance sheet, or the consolidated statement of financial position. So they're the group accounts. The reason we're interested in that is because we're interested in the whole economic entity of our company. When you buy shares in Ryman Healthcare on the share market, you buy shares in the parent company, Ryman Healthcare Limited. But Ryman Healthcare has a lot of subsidiaries. I think it's 40 or 50 subsidiaries. And every listed company I've ever known, and any decent sized private company I've ever known, are always a group of companies. And so Ryman Healthcare has some of its activities in the parent company, but it has most of its activities are actually in the subsidiary companies. Each of these companies in our group are separate legal entities. They prepare their own accounts. Each of those companies, they all prepare their own accounts. And in Ryman Healthcare's case, some of them, it's a New Zealand company, and some of its subsidiary companies are in Australia, quite a few of them. So they prepare their own accounts in Australian dollars. So they've got all these subsidiary companies, and the consolidated accounts is where they put all of the parent and the subsidiary company accounts together, line by line. They just add up everything, all the inventory from all the different companies, all their whatever it is, they add it all up, property, plant and equipment, they add it all up and you get the consolidated accounts. It's a very highly technical, difficult task. So if you become an accountant, you probably won't do that for a few years until you're a bit more experienced. And that's something for those studying accounting, you'll look at consolidations and so forth towards the end of your degree. It's technically a bit tricky. And so where is in the consolidated accounts? The reason for that is we want the whole entity that is controlled by the parent company, by management. With Ryman Healthcare, I'm interested in the whole entity controlled by the parent company, all the retirement villages, every activity in that group, not just stuff that's in the parent company. So use the consolidated accounts, not the parent company accounts. What do the little note numbers next to some items mean? Most people, pretty well everyone's seen these little footnotes in the financial statements. The financial statements are used, say the income statement or the balance sheet or the statement of changes in equity or the cash flow statement, they're usually just one page. Each of those, usually just one page. Not always, sometimes two, but usually one. So the balance sheet, you've got everything on one page. And so that's good to sort of get an overview and look at the items. But if you want more information on a specific item, you can go to the footnotes. And if you look at the footnotes in your firm's annual report, they go on forever. You know, there's millions of pages of footnotes. Some footnotes, for example, property, plant and equipment for Ryman Healthcare goes on for 3.5 pages. And the balance sheet is just one page. And one item in the footnote, it can be like 3 or 4 pages. So those little footnotes, you go to those, you can, if you want more information on a specific item that's in the balance sheet or income statement or any of the financial statements, if it has a footnote, you can go back to that footnote and read it. We don't just read through the footnotes all in one go. We just look at them if we want further information on specific items. So that's what those little footnote, those little note numbers next to some items mean. Do I have to enter all of the columns in the statement of changes in equity? The statement of changes in equity is a little bit confusing when you first look at it because it's got all these columns and then a total equity column. Each of the columns are the sub-items of equity. They're the various items of equity. And they might be issued capital, retained earnings, that sort of thing. That's some of the reserves. And so you've got all those items and you can see the changes in each of the items and then changes what's happening in the total. We only enter the total column. We're only interested in the total equity and we're keeping it simple. And so that's what we've put into our spreadsheets and that's what we'll be looking at. But you can see there's quite a lot of information about equity in the different items. There's quite a lot in there. There's quite a lot of stories in the statement of changes in equity, but we're just going to be looking at the total. One of the reasons we are looking at the statement of changes in equity as well as the balance sheet and income statement in a fair bit of detail is because when we look at the statement of changes in equity, it shows us the difference. It shows us how the financial statements are interconnected. It helps us see all the interconnections. And once you see that the financial statements are interconnected and how they're interconnected, then you've got a foundational understanding about accounting. How do I enter formulae or formulas? How do I enter formulas? You put equals, and say it's a sum, equals SUM, and then the brackets, and do the cells for the beginning and end of the sum. Quite a lot of people have looked at Maria's video on entering financial statements, and Maria recommends, she's a strong supporter of putting in the subtotals as formulas. If you do that, you put in a few items, and then instead of just copying across the subtotal number, which you could do, you can put a formula in there, and then you can check if the formula for the subtotal, say it's your profit figure, or your total assets, or your total current assets, if that's the same as the total in your annual report, then you can be confident you haven't made an error in those numbers above that are that you've entered them incorrectly. If it's different, then you can spot you might have made an error with inputting one of the numbers. So it's a good little check It's very important that you get the numbers in right, because we're going to be doing things with them, like calculating ratios and doing stuff. And if they're not right, it's going to cause a problem. And you have to go back and fix it up, which is it's a bit time consuming. Some people enter in the formulae and then they get it almost the same as the number, but it might be up by $1 or whatever. And that's because of rounding. Say your firm is in thousands of dollars, then the total is, the firm, it keeps its records, to the nearest dollar, or the nearest cent probably, but the nearest dollar. And then, so when it adds up the subtotals, it's using the numbers to the nearest dollar, even though it only shows them rounded to the thousands. So sometimes these subtotals can be slightly out from what you might calculate just using the rounded numbers, and that's just a rounding error. If that happens to you, use the actual number that's in the annual report in the financial statements. So you enter a formula with an equal sign. Some people are experts in Excel, a small number of people in our unit, and others people have a bit of exposure, and others it can be completely new. But wherever you are, this is giving you a chance, particularly if you're a bit new or haven't had too much exposure, to start to build some of these skills in Excel. You will need skills in Excel. Now, restating. The way we're using it in our unit in this next task is it means to move the line items around. So restating that one, we're moving things around. We're not taking anything out or anything in, we're just moving them around. We're moving the items in our financial statements into different categories. You might have your assets as current and non-current, and we're going to have them as operating and financial. We're just moving them around into different categories. This is a real task. It's something that analysts actually do. They do it before they start analysing the firm's financial statements. The reason for that is because a lot of analysts, not all, but a lot of analysts look at the firm as having separate operating and financial activities. And so we want to separate them out in our financial statements before we start to do our analysis. And we often value firms based on their enterprise value, which is the value of the operations, rather than the value of the company, which is after its financial activities, after its borrowings and so forth. So this is a real task. And just as Mohammed in Pakistan, you were talking about before our lecture, just how he was liking the fact they're real companies, just looking at it, and you get interested and you can find out a lot of stuff. This is also a real task, so it's authentic in that sense. But we're not learning about how to restate, we're just using a real task. What we're learning is we're learning more about financial statements in doing it. By moving the items one by one around, we have to look at each item and figure out whether it's operating or financial. And as we do that for each item, it supports us to think about what each item is. What is this item? Some of them have pretty crazy names, what is this? And you can talk with other people. I mean, lots of people have similar sorts of items, and figure out what we think it is and whether it's operating or financial. And this is not the same as companies that restate their figures, for various reasons, such as a change in accounting policy in their financial statements. So that's why we're doing it and what it is. We're doing it, why we're restating is to become familiar with financial statements. Some people think, well, we're learning about how to restate, and I suppose we are, in a sense. We're doing it, and that may be helpful if you become an analyst and you know how to do it, but it quickly becomes a very easy task that just takes a few minutes. You're going to spend hours restating your financial statements because you don't know what each of the items are. But once you're familiar with this, you just can quickly do it. I want an F next to each item, whack it through, and you're done, But so we're not so much, that's not the purpose, is not to learn how to restate financial statements this way, though we will be doing it, where the purpose is to become familiar with each of the items just a little bit. We're just becoming introduced and we're just getting to know them a bit more. For those studying accounting after this unit, you'll get into the accounting treatments in much more detail. You'll get into a lot more detail within all that. But this is just sort of lifting the lid, having a look. And for those who won't be studying accounting more, this is your foundational understanding about how to access the information from the financial statements. And the idea is that when you get to the end of the unit, financial statements can seem a bit scary or just sort of what is this? Just very inaccessible. Hopefully, the idea is at the end of the unit, you'll feel more comfortable with financial statements and realize they're not that scary. It's actually not that hard just to engage with them, at a sort of introductory level. The other thing that you'll be getting out of restating and our general throughout the assignments is you'll learn to use Excel. You'll be able to, just by using it, you'll be able to develop your skills further. For example, sometimes people have been using Excel for 20 years or 10 years, and they never noticed that it's got format painter sitting there. I mean, it's been enhanced over the years, and they, in order to keep their formatting, that line sorted out, the sort of unusually coloured lines that we've got, the format painter can allow you to do that easily. So some people can learn things like that. You're learning how to write formulae. You're learning how to link cells between worksheets, how to format things in various ways. So these are sort of basic skills in Excel. We're not teaching them, but you can learn them as you do. There's also, of course, the Excel workshops we've got. There's still one more to come, which will be focused on ratios. But there's two that have been done already, one more. And so you can attend them if the time suits, in real time and get some help with Excel. Trust me, you need to be able to use Excel, regardless whatever business discipline you're in, regardless of really whatever you're doing. Excel pops up all over the place. So, how do we restate? What do we do to restate? Well, first of all, number one, read chapter 4 of the study guide. You should keep up with the reading. We support you to read before classes so that when we get to the class like this, you've already read. And so we're helping you understand more. You don't have to understand everything you read when you read the study guide. Just go through it, particularly chapter 4. It's the toughest read. It gets easier after this. This is the toughest chapter. But just read it and you won't understand everything initially. That's not the idea, but you're just getting exposed to it. You'll have a few questions, you'll have a few insights. That's the first step. Read the study guide, chapter 4. Then listen to Maria's videos. There's one on the statement of changes in equity, there's one on the balance sheet, and there's one on the income statement. How we restate each of these. What Smart Money does, you've read the chapter, but you watch the video, and then you turn it on and off, and you just do your restatements as Maria's showing you how she's doing hers with her firm. Now, these 3 videos, they're live links on the lecture slides, so you can go to the week 5 tile on the lecture slides, and you can click on that. The videos are also in the introduction tile. There's the study guide and video section, and there's a link there. Also in assignment 2, there's a link to these videos as well in the assignment 2. So 1, you read the study guide. 2, you look at Maria's videos. The study guide and the videos, not just these videos, but all the videos, some of them are quite short, some are a little bit longer like these. They're the core content in the unit. That's the content. And then I help you understand them a little bit more in the lectures. And then as you apply that content to your firm and the assignments, that's when you really start to understand it and grapple with it. And the tutorials can help you do that. And then the online interactions with everyone can also help as well. That's number 2. And restating, it's not hard. Restating is not hard. All it is new. Some people find it they feel like it's really hard, but that's only because it's new. to you, and mainly because you don't know what all these items are, and also because you're not clear on the difference between operating and financial. You see, it's easy to gloss over stuff as we're studying it. So we've looked at operating and financial, and we've talked about the difference, and we'll be doing that again now. But some people got a good grip on it, and then they find it pretty easy. But if you haven't got a good grip on what's operating and financial, then how are you going to allocate? How are you going to put an O and an F next to each item? Not so easy, particularly if you're not even sure what these items are. So it's just new. It's sort of just, when something's new, it can seem hard. But that's don't get too stressed about it. A certain number of people get very stressed about this task. We don't want to make your life misery. We're just trying to help introduce you to my friends, the financial statements. This is an authentic task. When people are experienced, they do this task in like 2 or 3 minutes when you restate the financial statements. But it's new, that's why. It's and there's lots of resources to support you. And Maria's videos just work it through step by step. You can talk to everyone, you can talk to each other, you can share your draft work. No one can copy your work because you've got a different company to everyone else. So just take it, just enjoy it, don't get stressed, and just explore the world of financial statements and see how interesting you find it. Some people find it very interesting, other people less interesting. You get a sense of how and whether you start to see how the financial statements might be able to help you explore the world of business and understand what's going on in a business. So you need to know this. This is a good thing to know anyway. I've been teaching it, but you need to know it for this assignment, for the restatements. It's the difference between O and F. You've got to put O and F next to every item. Pretty well every item. In the balance sheet, you need to put O and F next to each item of assets and liabilities, not equity. And how are you going to do that if you don't know the difference between O and F? There's a wonderful chart that I put in the study guide, and then there's this wonderful chart that Rebecca Kirkpatrick put in, and which she did this subject a few years ago now. And a lot of people come up with their own charts over the years, and this one was particularly popular with other people. So it's in the study guide, and it's often the one people prefer. My one's simple, but it's possibly more suited to if you know a little bit more about the items, but it's a good summary of it. And this is a powerful way of viewing business. This is worth knowing. This could be the most important thing you learn in the unit, and it may be the thing that stays with you. This is how I view a business. I view all businesses. And you view them as having operating and financial activities separate. You can see how they get a bit intermingled in the accounts. We can all sort of get mixed up and we can sort of see them all. But if we separate them out in our minds, and this restating allows you to see that, we can look at the operating activities and the financial activities as being distinct and separate. Now, on the left-hand side are the operating activities. On the right-hand side are the financial activities. The operating activities are our interactions with our customers and with our suppliers. Our customers, they give us the operating revenue. We supply them with goods and services. And the suppliers, we give them our operating expenses, and they provide us with goods and services. Suppliers includes employees. Employees are not part of the company. They're a supplier to the company. And so the operating activities, that's represented by the net operating assets that we have to support our operating activities. And the operating income is operating revenue, that's our interactions with our customers, less the operating expenses, which is our interactions with our suppliers. Ryman Healthcare has more than $1 million of operating expenses every day, including Christmas, every day. And so there's a lot going on right now. and the customers. So there's all this activity going on in our firms. That's the operating activities. The reason it can be powerful to separate them out from the financial activities is that for most firms, typically it's your operating activities where your firm is adding value or destroying value for its equity investors. Whereas in Western countries or the countries with developed capital markets, the financial activities tend not to be where you're adding value. They're too efficient. They're pretty efficient and it's not too much scope to do that. But in the operating activities, that's where firms can add value. Now, the financial activities on the right, that's our firm's interactions with the equity investors. And that's all the interactions. The firm pays dividends to the equity investors. It issues shares to the equity investors and they give them money. And they buy back shares from the equity investors. So there's all those interactions with the equity investors and also with the debt investors, the banks. Their net interest payments, so their payments to the bank for interest on loans, and also they get some interest if you've got some money with them, cash. The repayment and issue of debt, so you're repaying debt, so you're giving cash to the debt investors, they're giving, or you're borrowing from them. It's all those interactions. That's the financial activities of our firm. And the net financial assets represents that side. Most firms have net financial obligations. In other words, their financial liabilities, their borrowings and so forth, are greater than their financial assets, which might be cash in a bank and that sort of thing. So we can view our firm as having separate operating and financial activities, but of course, the firm's actually just one firm, isn't it? Whenever we break things up, it's really still just one firm. So there are a lot of interactions going on between the operating and financial activities. And in this chart, you can see Rebecca's got the transfers between net operating assets and net financial assets. At the top there, these are the interactions between the operating activities and the financial activities. In the top double, it's a double-headed arrow because money is going both ways, is the cash flow from operations, C. And Rebecca has AKA, the operating income after tax. So our cash flow from operations, C, is the same as our operating income after tax, OI. You'll be identifying that figure when you restate your income statement. Operating income after tax. If your firm is generating cash flow from its operations or it's making positive operating income after tax, there'll be transfers from the operating activities to the financial activities. If it's negative cash flow from operations or negative operating income after tax, there'll be transfers from the financial activities to the operating activities. Ryman Healthcare makes a lot of cash flow from operations. A lot of money, a lot of cash coming out of the business from its customers, less the suppliers. And that goes in the financial activities. And free cash flow equals the cash flow from operations. Oh, I'll get to that in a minute, actually. Less the net investment, net operating assets. But we're going to look at that. We've got to look at the net cash investment in NOA, which is the I, AKA change in net operating assets. Delta, that's that delta symbol in net operating assets. That's change in net operating assets. If your firm is investing more money into its net operating assets, then there'll be cash going from the financial activities to the operating activities. And if it's, and it can go the other way, if it's reducing its net operating assets, then there'll be cash coming out of the operating activities to the financial activities. Ryman Healthcare is growing. It's in a strong growth phase, long-term growth phase. It's piling money into its net operating assets like there's no tomorrow. $500 million of investments into new retirement villages and so forth every year. So it's borrowing money basically from the banks and putting it into its operating activities. So they've got these interactions, these transfers between net operating assets and financial activities going on. The free cash flow, so you've got the cash flow from operations and the net cash investment in net operating assets, or operating cash income after tax and the change in net operating assets. And that interaction together is called your free cash flow. Your free cash flow equals your cash flow from operations less your net cash investment in net operating assets, C minus I, which equals operating income after tax, operating income OI, minus your change in net operating assets. And that's in that little circle in the middle. This was the way Rebecca Kirkpatrick figured out for herself what this means. This is her description. A lot of people find this helpful to have it written out in full like this. This is a powerful way of looking at business. This may be the major thing you get out of this unit that you take with you. A number of people tell me that over the years. And it's certainly the way I look at business. And a lot of people do. So you need to understand the difference between O and F. Operating activities is your interactions with your customers and your suppliers. Financial activities, your interactions with the equity investors and debt investors. Now, as you restate your financial statements, and some people have been doing this already, what if things go wrong? The checks and balances. If everything goes smoothly, that's great, but that doesn't happen for many people. Most people, something goes wrong. How can I check that I've got it right? Also, it might have gone right, but it mightn't seem to be right, but how do I know? Well, let's have a look. The statement of changes in equity. The first one you do is this one. This is the most straightforward, and it's usually pretty straightforward for most people. Comprehensive income, CI. You can check that the comprehensive income in your statement of changes in equity is the same as the comprehensive income in your restated income statement. So when you've restated all your financial statements, you can check in the statement of changes in equity, is comprehensive income in the statement of changes in equity the same as my comprehensive income in my restated income statement? If it is, that's looking good. If it's not, you've made an error somewhere. The second is including the opening and closing equity. Make sure you've included the opening equity each year and your closing equity each year in your restated statement of changes in equity. A certain number of people can leave that out. The reason is, in your statement of changes in equity each year, you'll see there's a balance at, say, the opening, there's a balance at 1 July 2000, balance at 1 July, and then there's a balance at the 30th of June at the end of the year. And they each have years like 2021 or whatever it is. That's your opening balance and then your closing balance. So you just call them opening balance and closing balance, and then you just put the figures for each year, because then you can see that the opening and closing balance, the closing balance in one year is the same as the opening balance in the next. And the other check you can do is that the closing equity each year in your statement of changes in equity is the same as your equity in your balance sheet each year. If it's not, you've got an error. Because you can see how the financial statements are interconnected. And so the closing equity each year in the statement of changes in equity has to be the same as the equity in your balance sheet each year. So there are a few checks and balances you can do to check, see if you've made an error. Pick if things go wrong, you can see where they've gone wrong, and that helps you fix them up. And also, if you do these checks and everything looks good, you can be confident you've got it right. So restating the statement of changes in equity is easy. Most people find it easy. A few people get a bit caught up, get tricky. And also, if you've made any errors in getting your statement of changes in equity into your financial statements worksheet that sort of pops up there. So a few people have a few issues, but most people find this easy. So do this first, and then you've maybe got one down. Now, in restating your financial statements, you'll need to link cells between worksheets in Excel. Now, there's a couple of videos on this. Excel link data between worksheets and how to link Excel worksheets and workbooks. And those two videos are in the unit introduction tab. So you can find them there. And so you can look at those. There's plenty of resources on Excel anyway on the internet. And also you can see in Maria's videos, you can see how she's linking cells between worksheets for her company. And you start a formula or link by pressing equals. You can also press plus, by the way. I often use plus, but we use equals. We're using equals in the video. So you can start a formula or link by pressing equals. So you start equals, and you can see how Maria's done in her videos, and you can also see it in these, how to do it. Linking cells between worksheets is a key foundational skill in Excel. So a number of you will know how to do it already, but many won't, and this will give you lots of practice of doing it. So that'll be a useful skill in Excel. Other comprehensive income. Other comprehensive income, each of the items in this area can have a lot of funny names and can seem a bit confusing. So what is other comprehensive income? Well, we'll have a look at this short video. The link is live on the slide, but this particular video I'll just open up.
Revenue is limited to income arising in the course of an entity's ordinary activities. The definition of income in the AASB conceptual framework includes gains that may not have occurred in the course of the ordinary activities of a firm. For example, changes in the revaluation surplus of property, plant and equipment, and gains on the disposal of non-current assets. Other comprehensive income includes items that fit within the definition of income in the conceptual framework, but do not fit within the definition of revenue. For this reason, other comprehensive income does not appear in a firm's income statement. It may be shown in a statement of comprehensive income, which may be separate to a firm's income statement, or integrated into the income statement as a single statement of comprehensive income. Also, some or all of other comprehensive income may appear in the statement of changes in equity.
So other comprehensive income, most firms will have some, but some not. And sometimes firms can, and sometimes they can have quite peculiar names, you know, and all the, so don't worry about it. You don't have to understand everything. But the reason there's other comprehensive income is that income, there are some elements of income that are not part of revenue. In other words, there's actually a difference between income and revenue in accounting, even though we often mix the words up. And other comprehensive income is that income that is not part of revenue. It's the gains that are not in the ordinary activities. So these sort of items, they're a bit unusual names. These are not in the ordinary activities of the firm. So the firm's doing things normally, but these are some items that are outside the normal day-to-day activities of the firm. And you can see there's lots of these. There's numbers of short videos that can help you as part of the content. Some of them are longer. This one is from a later subject, but it can show you just what that item is. And we'll have in week 7, we'll be having a little bit more of a look at that. So just take it cool as you work through, and don't worry if you don't understand all these items, that's fine. Now we're going to have a minute paper. So go to Socrative. Now, what was the most important thing you learned today, and what questions still remain unanswered? Now, Ashley in Brisbane, good on you, putting for where you are. Ashley in Brisbane, how to check for errors. Yeah, that can be a very valuable thing out of here. You typically will have some errors when you do it because you'll just make often some simple little mistake in the numbers and so on. So that's good. Errors are not a bad thing when you're doing this. That's sort of how you learn stuff. You might be learning some things about how to use Excel, and it just helps you go through. If everything goes smoothly, you possibly learn less than if you make a few errors. So that's good. I think that's right. How to check for errors is a really good thing. And also it sort of helps you check whether you got it right or not. Imogen in Melbourne, the difference between F and O. That's right. I think that it is a very significant thing in this lecture and class. If you're clear on the difference between operating and financial activities, you'll find the restatements pretty easy, pretty straightforward. If you're not, it'll be a nightmare because how are you going to do it? You'll be all over the place. You don't quite know what the items are anyway, and then you don't even know if it's operating financial. Imogen, so what is the difference between operating and financial activities? Do you want to let me know? What do you think? How would you describe the difference, Imogen?
Can you hear me?
Pardon?
Can you hear me?
Yeah, we can hear you.
So the difference, between financial and operating is basically, oh God, I can't put words.
If someone asked you what was the difference between operating and financial activities, what would you say?
Well, financial statements are to get a better idea of how to get a better idea of the firm's business, their activities and what they're undergoing.
The operating activities?
Yes.
Yeah, the difference between operating and financial activities, here's a good way of thinking about it. The operating activities are the interactions with customers and suppliers. So if I had an expense, employee costs, would that be operating or financial? Would that be operating or financial? Are employees a supplier or customer? Imogen, are you on a roll? Employees are a supplier, they're supplying labour. So that's operating, isn't it? If I've got a factory that's making things, that's it. I'm transforming things I've got from suppliers so I can sell them to customers, that's operating. So you can see a lot of things are operating, but the financial is where we interact with the equity investors and financial investors. So if it's something to do with borrowings, paying interest and so forth, that would be financial. Anyway, that's good. Thanks, Imogen. I didn't want to put you on the spot too much. And David, some income not included in revenues. That's good, isn't it? That's interesting. The income and revenue, these are defined terms. Revenue is defined in the accounting standards. It has its own accounting standard, ASB 15. And the income is defined in the conceptual framework. Income is actually the term used in the fundamental accounting equation, if you like, in the business model. We use revenue, which is slightly different to income. And other comprehensive income is the difference. Again, that's a slight simplification, but it's good enough. So some income not included in revenue. Revenue is the ordinary course of activities of the firm. Sometimes firms do some things that are a bit unusual or just one-offs, or and you can see that when you look at your other comprehensive income items, you'll see that they're sort of not things they do every day of the week. Good one. That's a good one, David. Jaden, Gracemere. G'day, Jaden. Gracemere is just outside of Rockhampton. It's really part of Rockhampton. The difference between operating and financial activities. Yes, that's a key key distinction. Jaden, are you able to tell me the difference between operating and financial activities? What do you think they are?
It's kind of the same as you said before, where the operating activities are more to do with, like, is it what gives them, like, what allows them to get revenue, like the customers and their suppliers?
Yes, it's the interactions with them. So if you think of that, when you look at each item, you can sort of think, for example, you've got inventories in the balance sheet. Would they be operating or financial?
Operating,
And why is that?
because they get the inventories from the suppliers.
Yeah, they buy them from suppliers. And what do you do with the inventories? Do you just leave them in the warehouse? What do you do?
No, you sell them to the consumers.
Yeah, so it's sort of in between the two, isn't it? So that would be operating, wouldn't it? And so, and so it's also transforming. Firms typically buy things from suppliers and transform them in some way, and then it might be moving them around or doing something to them, and then they sell them. And if you're able to buy buy from suppliers versus, you know, your inputs, and then sell them to customers for more than you paid for them, is that a good thing, Jaden, or a bad thing?
Sorry, could you repeat that?
Oh, if you're able to sell to your customers at a higher price things that you buy from suppliers and perhaps put together, is that a good thing or a bad thing?
That's a good thing.
That's a good thing, isn't it? You make money that way, don't you?
Yeah.
And you've added value. You've added value because you turned something of value of, say, $100 into something that people will pay $150 for. So that's right. So I think you're getting the idea. That's good, Jaden. And Derek, learning how to restate financial statements to gain a better understanding of the firm's business activities. That's good, Derek. We are doing this task. It's an authentic task. I haven't made it up. It's not just a pretend task. It's something that real people do. It's a sort of a technical. It's a bit technical and sort of. It's something that you do in the capital markets. I've come out of the capital markets, so it's something I'm used to doing. And so you sort of just. But so it's an authentic task. We're not just making it up, but so it's useful if you ever find yourself analysing firms. This can be a useful task, but the real purpose of it is to support you to look at each item and just get to know it a little bit better. Look at inventories, or look at cash, or look at trade payables or trade receivables, and just sort of try and figure out a little bit about what they are. So that's good. And the reason we do it in the real life is a lot of us look at firms as having separate operating financial activities, and it's the operating activities that we value. We value them, and that's the enterprise value. If you ever hear of something saying a firm's enterprise value is X, that's the operating activities. It excludes all their borrowings and financial activities. That's good. Anita, how to differentiate operational and financial activities? Yes, Anita, and we call it operating activities. A number of people call it operational. We're calling it operating, and we're calling it financial activities, not financing. That's just how we're doing it. Operating activities and financial activities. That's good. So a lot of people, it's been the distinction between operating and financial activities. You do need to have that clear, else you're going to find restating very difficult. What questions remain unanswered? Jaden in Gracemere, are the values for everything displayed in the diagram found within the cash flow statement? No. We aren't going to be restating the cash flow statement. We're going to be restating the income statement, balance sheet, and statement of changes in equity. That's enough to do, So we're not doing the cash flow statement in that detail. We've introduced you to it and you've had a look at it, but we're just sticking to those three. Now, so we aren't dealing with cash per se. We're dealing with operating income, and we're dealing with net operating assets and so forth. And we learned about accrual accounting. I don't know if you remember what accrual accounting is. but it's where we record things not when the cash changes hands, but where the economic substance occurs, which can be at a different time. So we're going to be using figures out of the income statement, balance sheet, statement of change in equity, which use accrual accounting. So it's not, we talk about cash and stuff, cash, free cash flow and so forth, but we're measuring that based on operating income. Operating income less change in net operating assets, which have accrual accounting embedded in them. Does that make any sense to you, Jaden, or would you like to ask a follow-up question?
I think I was kind of wondering to know where you get the value for like your operating revenue and your cash flow from operations, and where you find all those values.
From your income statement and balance sheet.
Okay.
The income statement and balance sheet, they have all the 5 elements of accounting. So it's all there. Assets plus expenses equals equity plus revenue plus liabilities, all those 5. The assets, equity, and liabilities are in the balance sheet. The revenue and expenses are in the income statement. So it's all there. And you can see how we use the word cash flow in all sorts of ways in accounting. And the way we're using free cash flow is it's operating income less change in net operating assets. So you don't have to look at the cash flow statement. You don't have to worry about it for restating. Does that help a little bit? You want to ask another
it helps.
question? You might have another question.
That's all right.
You have a comment about that? What's your comment?
It helps a little bit. I'm looking through my income statement and balance sheet for my company right now to try and see where I can find all these values.
Well, you can't find the operating income or net operating assets in your income statement balance sheet at the moment, can you?
And you have to calculate that, won't you?
Well, when we restate our financial statements, that's where we determine, because we're moving things around, the operating income is only the operating revenues and operating expenses. So your current comprehensive income also includes financial. So once we take the financial out, you'll identify your operating income in your restated income statement. And when we move all the assets and liabilities around, they're currently in current and non-current categories for most people. We're going to put them into operating and financial. And so the operating assets and the operating liabilities will be separated out from the financial assets and the financial liabilities. You'll be doing that. And so then you'll be showing the operating assets less the operating liabilities, and that gives you your net operating assets. And that's, so you're going to calculate these based on the restatements. It's quite a significant task for you to be doing when you're new to accounting like this. So it's a proper task. Once you know a bit about accounting, it's very simple and just a small technical task. But this is giving you the chance. Look at each of the items. Just follow the instructions. Particularly on Maria's video, she'll show you where to put things. You can discuss and ask these things. You don't need to try to do it on your own. It should be, if it starts to feel a bit stressful or not fun, that's not how it should be. It should be a little bit sort of tricky at times, but it should be, you should sort of enjoy it, really. Does that help a little bit, Jason?
Yeah, it does. Thanks.
Yeah, you're coming to grips with it. And that's all right. These concepts are still new. The idea is you get exposure to the concepts from the study guide, also from the videos and from the lectures, and then you apply these to your firm. And as you apply them, that's when the rubber hits the road and you can really start to understand it. Once you've done the task in the assignment, whatever it is, you should have a bit of a sense that you understand that aspect. And you could still have a few questions and we can discuss them. Anyway, that sounds good. Anita, how to separate operating and financial activities? Oh, you've got them as operating now, Anita. That's good. In the right place in Excel. In the Excel, we don't use when we talk about Excel, it's just when we, Excel has a capital letter. When things sort of have a capital letter, like Excel, we don't use is in the right place in Excel. And it's a bit like how we say I'm going down the street, but when I say I'm going down Pitt Street, we don't use the because it's got the capital. It's the same with Excel. How to separate operating and financial activities in the right place in Excel. That's right. That's great. That it's you've got questions around that. What? Yeah. There's what? Do you have any specific questions, or what's your question about that, Anita?
I haven't started the assessment tool, but I think that probably will be my question next.
That's right. You'll have to do it for each item. You'll see the way you do it is you start with the statement of change in equity, and that's pretty straightforward. Usually you don't have to change anything. You can just link them across. You might have to do some slight change, but you mainly just sort of tidy up the presentation slightly. So do the statement of change in equity first, and that's largely linking cells between worksheets. And get that out of the way. And then when you do the next one is a balance sheet, that's when you're setting up the operating assets, operating liabilities, net operating assets, and so forth. What you do is in the financial statements worksheet, you'll see there's a little column A. It's a little narrow column there. And in that column, you can put O or F next to each item, just in the spreadsheet, in the computer. So you just put O. It might have inventories, and you might decide that's O because it's dealing, it's suppliers and customers. It's storing the stuff you get from suppliers before you sell it to customers. That sounds operating. So you put O, and another item might be F and O and so forth. So you do that down there. Once you've got all those items, you might have to talk to people about it. Once you've got the O's and F's down for, say, the assets and liabilities, you don't need to put O's and F's next to the equity items. We're only doing the assets and liabilities. Then you can start linking. But now you're going to be linking the operating assets, the assets with O next to them under the operating assets heading. And then there's going to be any assets with an F next to them, you're going to put them under the financial assets. And then with the operating liabilities with an O next to them, you put them under operating liabilities. Liabilities with an F, you put them under financial obligations. Then you can calculate net operating assets and net financial obligations. Some people might have net financial assets instead. So that's the sort of thing you're going to be doing. Yeah, and you'll probably have a few questions, Anita, to say. And that's fine. It's a learning, that's good. It's good to make a few mistakes and to ask questions, because that is the learning process. But don't let it become an onerous thing. If you start to feel like this is getting out of hand, just talk to people and sort it out. And if you do get a bit stuck on things, don't worry. We find everyone can do it. I've taught 8,000 or 9,000 first-year students over the years, and everyone can do it. If you just work through it, everybody can do it. So it's just the process. All right. So today, what we've done is we've looked at restating our firm's financial statements, which is your task. Should you wish to accept it, this is your task in assignment 2. And by joining our unit, you have accepted the task. This is restating financial statements. We looked at some common questions people have, and you might have them as you're doing it. Some people have already started their restatements. What, why, and how, what is it, why we're doing it, and how, some issues, some tips around how. And the reason we're doing it is not to learn about restating financial statements so we could be a share analyst, though if we do become that, that would be helpful. It's about using an authentic task that people do in the real world in certain contexts to help us look at each item of our firm's financial statements and just get to know them a little bit better. And it's just introductory accounting. We don't have to delve into a whole lot of depth if we don't want to. Some people get very interested, and that's all right. You can look into however much depth you like, but you just have to do it at the introductory level. That's fine. All right. Well, thank you very much, everyone. And thank you for your involvement. And I look forward to continuing to work with you as we restate our firm's financial statements. Thanks very much. Bye for now. Bye-bye.